So yesterday started off on a really good note, and then it turned very quickly. And frankly, the crypto market should not have dropped in the way that it did. It was actually a huge surprise. Anybody that tells you that they saw this coming or they predicted this, flat out lie, because we got some surprise jobs data that caused a little bit of uncertainty, and then this cascade of events to take place, which is what dropped the crypto market, dropped the stock market. And in fact, although this did take place, it was kind of a big nothing burger. And in fact, when we've done this, historically speaking, we've tended to have some nice rallies out of here. And I want to break that down for everyone. So if you guys are new or haven't already, make sure you hit that subscribe button down below. Hit that bell again. It's free to do. It'll keep you updated anytime there's new content live here on the channel. So I appreciate you guys bearing with me. I'm losing my voice a little bit. But yesterday, ADA was looking really good to start the day. Up at $1.12, $1.13 at the time of filming my videos, looking really, really good amidst a breakout, kind of prepping for its next leg. And then we got a little bit of a surprise that started this cascade of actually long leverage liquidations, which I'll show you guys what that looked like in just a moment. But really, BTC was kind of the big trend setter for the market, we'll call it. BTC, ugly candle day, down 5.1%. It's only happened 11 times since this bull market started. And I'll get to some data about what tends to come following that a little bit later on in this video. But really what caused this to begin was actually some surprise jobs data. And what they found was that US job openings were actually inching higher. So this was a very big surprise. Tuesday showed that there were 8.1 million jobs opened at the end of November, an increase from 7.84 million in October. Expectations were that we were going to see 7.7 million. So why this was kind of we'll call it a yellow flag. Why this was kind of a yellow flag is we're amidst this time of a cooling job market, which is very, very important for getting back on track in terms of inflation, because you want to see these job openings cooling down. You want to see hiring slowing down. You want to see unemployment slightly on the rise, because all this is all indicating a cooling jobs market. It slows down consumer consumption, we'll say, right? And this was basically a trend that went the opposite direction. And why this is kind of strange is that hiring was actually down. We slipped from actually 5.3 million hires in October to, 5.4 million hires in October to 5.3 million hires in November. So you're actually seeing this essentially employer confidence, and by basically creating these new jobs that are available for people to enter. But the labor market isn't entering this. We're actually seeing more employee resilience, more employees staying at their job. We're seeing actually firing down, which is all kind of trending the right direction. The only thing that was higher was this jobs data, was the available jobs, basically the openings, right? So that caused a little bit of a stir, obviously, in crypto, in the stock markets. And unfortunately, when we talk about crypto, leverage plays a very big part into some of our most recent moves. And you guys can see, for example, what the last, where'd that go? What the last day looked like in terms of BTC long leverage liquidations. You guys can see we basically tanked, right? I don't want to say tanked, but we had a negative 5% day in terms of BTC, and we liquidated all these longs on the way down. It moved very, very quickly. And unfortunately, it sent kind of ripples through the industry. Okay. We saw obviously ADA get affected. We saw alts throughout the space get affected. Not a fun day whatsoever. Now, that being said, institutional money kind of piled on top of here. We saw a lot of institutional money dumping. BlackRock actually held strong and accumulated $596 million worth of BTC added. I think we actually had a little bit of an outflow day on the Ethereum side. Yeah, nothing crazy there. Fidelity actually kind of leading the way on selling. BlackRock pretty stagnant there. But that's basically what happened. And unfortunately, we had retail kind of pile on and panic and sell. And what I have to say is that, we've seen this happen before. I'm trying to remember exactly where it was. I think it might have been like back here in this early part of August. We had this strange outlier jobs report that didn't align with any of the other data. And then we had a huge subsequent recovery following that. Okay. I'm not saying that this is going to happen again this time, but understand that one piece of data shouldn't cause the market to bleed in the way that it did. Now, that being said, I did actually make a post yesterday talking about some data from what we've seen from some of these prior drops. So, for example, dating all the way back to the start of the bull market cycle, October of 2023, BTC has had 11 days of negative 5% daily candle closes. Of those 11 days, only 4 resulted in subsequent red days for an average loss of 1.35%. The 7 green days had an average increase of 3.23%, with a recovery in the following weeks of 8.95%. Interestingly enough, the red days resulted in gains in the following weeks as well, with some data missing, as we're obviously on our way down from 108K, which was one of our most recent 5% drops days. So basically, the point I want to make is that it's all going to be okay. All right. And understand that, when we're looking at ADA right now as well, we did something very interesting actually on the momentum indicator. So if we actually look at the 4-hour charts, we did flip into bearish momentum here on the 4-hour. But what's kind of interesting is when we look actually back at the start of 2024, we did something very similar here. Right before we made our next extension, we were in green, we were in bullish momentum, flipped neutral, down into red, kind of chopped around for a little bit. Actually, coincidentally, around the same time, actually on January 7th, coincidentally enough. And then we know what followed. We actually had BTC, obviously, or BTC. We actually had ADA making a 20% extension to the upside from our local high. So obviously, if we make that move here, ADA is pushing like $1.50. That would make a whole lot of sense, right? That's kind of what we've been talking about as of late. Now, to break this down even further, what we actually got in terms of ADA was a really nice retracement on our fib retracement levels here. So we actually came down and basically touched our 382 line. So this might not be a bad spot for ADA to bounce. I'm not going to, some of these days, again, like I showed in the data, we have a little bit of a red day again. We'll have to wait and see how the day plays out, unfortunately. And right now, ADA's sitting right at pretty important support. I'd love to see it hold its 20-day moving average. Understand that it is possible for us to fall down and test this 92-cent level if we get a crap day across the market. We'll have to wait and see what U.S. money decides to do. U.S. money is waking up at the time of filming this video. So it's kind of a wait and see approach. And that's obviously how, they're approaching the jobs market right now. There's a lot of capital still sitting on the sidelines. We haven't really seen that big flow yet. And I think some people that were posting on Twitter, we're explaining it the right way. People are exhausted. I think people are exhausted by the drops in this market, and understand that there's going to come a point where they're not anymore. If you were looking for opportunity, if you were looking for another moment to build your position, we got it. This is gift days in the market. So I appreciate you guys. I hope you enjoyed the video. Let me know your thoughts below. Have a great day. Catch you guys in the next one. Take care.